Trump's win and jobs data set to shape markets. Donald Trump's return to the White House has captured the market's attention, but investors are about to face a reality check with critical labor market data on the horizon. This week's jobs reports, especially November's employment data due on Friday, could heavily influence the Federal Reserve's plans for interest rate cuts, which in turn will significantly affect the stock and bond markets. Why jobs data matters. Brent Schutte, Chief Investment Officer at Northwestern Mutual Wealth Management Company, points out that the market is hoping for a delicate balance in Friday's jobs numbers. Positive, but not overly so. If job growth is too strong, it could dampen expectations for the Fed's planned rate cuts, which are vital to sustaining high stock market valuations. The relationship between Fed rate decisions and market valuations is crucial. Higher interest rates reduce the appeal of lofty stock valuations by decreasing the present value of future profits. This has parallels to the late 1990s dot-com bubble, which burst when the Fed raised rates in early 2000, causing investor sentiment and valuations to collapse. The Fed's current stance. Currently, traders see a 66% chance of the Fed cutting rates by 0.25% in December, following earlier cuts this year. However, the Fed has emphasized its data-dependent approach. The labor market's health, measured through November's payroll data, will play a pivotal role in shaping the Fed's next move. Fed Chair Jerome Powell has previously highlighted concerns about labor market softness, using it to justify the Fed's recent monetary easing. But with inflation remaining stubborn and economic resilience persisting, some investors suspect the Fed might pause rate cuts in the near term. Treasury yields and market performance. Treasury yields have recently dipped, offering some relief to equity investors. The 10-year Treasury yield fell to 4.19%, its lowest level since late October, after peaking above 4.5% earlier this month. Lower yields are a boon for stock markets, as they reduce borrowing costs and support higher valuations. Meanwhile, U.S. stocks have entered December with strong momentum. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite all posted gains last week, buoyed by post-election optimism and seasonal trends. However, high consumer confidence and record-high expectations for stock price increases could signal a short-term market pullback, according to economist